I think a lot of people think they're planting all of their corn acres to the soybean acres. It's really, on average, only like half.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Well, I certainly missed you if you didn't have a chance to make it to the Family Farm Masterclass this past weekend. We had a lot of fun. I thought it was very, very informational. We had great audience participation, and we look forward to, well, our next event coming up. It will be next week in Denver, Colorado at Commodity Classic, and Comstock will have a learning session. It'll be on March 4th at 10 o'clock in the morning Mountain Time, local Denver time. And it'll run for about an hour, and we're going to talk about all things related to the ag markets, the new report coming out from the Ag Outlook Forum, etc. One of the panelists will be Matthew Kruse, the president of Comstock Investments. He joins us right now. Matthew, congratulations on a great meeting in Des Moines last weekend. Any thoughts on that before we start talking on today's episode here?
Well, overall, I think it went well. I think people really enjoyed it, got a lot out of it. I had feedback that it was one of the best events actually that people have been to, or at least some of the best panels that they've been to. So I think people had fun. It was definitely worth it. And I know you had some good back and forth banter with Willie Robertson when he was on stage. So he was kind of a hoot, wasn't he?
That he was inspirational too. And but I just thought it was jam-packed with useful information for everybody, whether you're talking about maybe succession planning on the farm or how to manage your farm operation more like a business, not just, a way of life, but a way to make money at it as well. And so I just thought it was just totally loaded with good information. Also great ideas on maybe some ways you can have some value-added income on the farm, like with our social media experts that talked. They presented a whole wide array of ideas on some things you can do from that angle. And it's not like we're totally separated from our urban cousins anymore. You have access to connectivity, and I thought that was actually great. So well done. Great conference. Look forward to the next one. Let's talk about current conditions here. One thing that's going to take place between now and when we get into Commodity Classic is the much anticipated Ag Outlook Forum that'll be taking place in Arlington, Virginia this week. And I want to get your thoughts on that. Where do you think we're headed with all this acreage talk?
Something I wanted to talk about now. I may pull up my screen here, but we're obviously getting closer to spring planting, and so the chatter about acres, starts to take center stage here. And so we have some projections about where we've been and where we think that we're going. And the USDA is having their Ag Outlook Forum here. I think Thursday, Friday, they'll come out with kind of their projections on using their methodology for where acres will be. And now then later in March, the end of March, we get the prospective planning reports, which is based off of actual farmer surveys. And so, but just kind of what a lot of the chatter is, just using this as a baseline, you kind of see where we've been at, last year, or where we're finishing up this last marketing season, the 24-25 season. Came in at 90.6, and we update the yield there at 179.3. And so right now at 1.54. Now that can still change yet. There's still time for that to get updated. Some people think that they might still want to increase demand a little bit, and that's certainly possible. Ethanol is doing well. I could see them increasing ethanol by 25 million bushels, and so maybe you inch that number lower to 1.5 instead of 1.54, and that number kind of carries over. I should update that here. So we put 1.54. Some people are using 93 million acres as a place to start from. Last year USDA, and this is, I think a big point of contention, they used that 181.5 bushels per acre. And that's something that I guess I have a problem with. I realize they would argue they're just using, the standard trend line deviation. But what happens is, they set the bar pretty high, which then seems to artificially deflate prices. And then as we get into the season, something invariably happens. There's drought or flooding someplace. And then we get to the end and okay, yield wasn't quite there, and then they reduce it by 3 bushels per acre, and then prices rally. But by then, it's kind of too late for a lot of producers. They've locked prices in, and and end users had 6 months or more to lock in pretty cheap prices. And so but under this scenario, which is kind of starting out here is what I think the USDA is going to come with, and I could be way off here, but this is more or less what I think they're probably going to come with, and that's going to start out with a much higher ending stock scenario, back to 2 billion bushels, and where we started last year from. 2 billion bushels is frankly back down to $4 corn again. Now you could start to this is where you start to make changes. In my opinion, with the way things are looking with the corn to soybean ratio, you might be a lot closer to 95 million bushels. So if you put 95 million in there, I'm going to be more conservative on yield. Let's put 179. You do that, and now you're at 2.1 billion bushels. And so, but what if USDA, puts it at, maintains their methodology, doesn't want to change, puts it at 182. You're looking at 2.3 billion bushels. Maybe they'll change, but that's kind of the methodology that they've had in the past. I longer term, I'd be looking, more for that 179 as we, maximize acres. A lot of times, some of those marginal acres get shifted into corn. Then it becomes more a question: what's demand going to do? We've kind of boosted the feed usage here, which I think makes sense. Even though the cattle herd are down, they're keeping cattle on feed a little bit longer, increasing weights. Looking at ethanol is in this scenario is flat. Exports is kind of the outlier where I could see exports continue to increase, but I think the big issue there is tariffs. What are tariffs going to do? And just saw news out this morning that Trump says no, we are in fact going to keep those tariffs on Mexico, and they've been a great customer for corn. And so that's in this scenario, maybe it does make more sense to have a lower export number. But if you want to keep it at last year, well, then you're at 1.86, which is better, but it's still higher than ending stocks where we were last year. But if you want to, I think it's easy to argue that tariffs are going to have an impact at some point. The way that the administration is talking, and of course, nobody can guess what that is. But if you go back to just 22, 23, 24 season, you could go back lower to 2 billion bushels for exports, and you're still, the point is, with these adjustments that just kind of running through some hypothetical scenarios, you're still looking at a bigger carryover than last year. And to get back to $5 corn, you're going to need some sort of weather event, which sooner or later does tend to happen, I think. But it's something that's really hard to market up on. And so unless something changes here, if we can't get a trade deal done with China, I'm kind of concerned going into the planting season that it's basically going to be a repeat of last year, where once you get to the spring planting and the outlook looks pretty good, the weather outlook's good, prices are going to reset lower, and then we're not going to find out until next winter where the USDA says, oh, okay, the yield wasn't quite there. We started with this really high bar for yield, and now we've reduced it dramatically.
I see you have a tab on the bottom that says soybeans. Did you put the table together for that? It looks like you did.
You can run through a similar situation here where if they're going to raise corn acres, they're going to offset that with soybean acres, and so even reducing soybean acres, and then they're probably going to come with a higher yield again, 52.5. That puts ending stocks at 500 million bushels. Quite a bit more. We're at 380 right now. Again, you can play around with what's the crush number is going to do. Exports, we're at pretty good 1.8 this season, but again, with risk of tariffs, where's that put us at? Look, let's say if they maintain their levels, it's 300. That helps quite a bit. Let's say yield is the same as last year. We're reducing soybean acres, so maybe we can yield a little bit better. Well, that takes it down to 155. So I can see, a scenario where ending stocks do improve for soybeans, but it might take a while for us to get there, because I don't think USDA is going to come with this 50.7. They're going to come with something like 52 or 52.5, and that obviously makes a big difference. And then again, exports are kind of the big outlier. I think crush is longer term. Year to year, it's been increasing and doing well, and so I'm comfortable with this 2.475. But if we ramp up trade wars again, what's that going to do for our exports? And so, if you go back to 1.6, well, then you're up to 500 million. So there's a pretty big swing. This 500 million bushel ending stocks for soybeans, that could mean $9 beans. But under those scenarios where exports remain the same, yield isn't quite there, you could be below 200 million bushels. And it's pretty hard to get the USDA to want to commit to that, to admit that there's less than 200 million bushels in ending stocks too, by the way. And so the soybeans is kind of all over the map. It's just what kind of hypothetical scenario do you see happening? And that's based off of 83.5 million acres. That could be even lower. It could be 83 million. So we'll get a little bit more clarity on that here later in the week. And then, by the end of March, we'll get some more information there.
Well, given the history that we have had from all these Ag Outlook forums in the past, how often are they right?
Probably not very. I mean, we like to joke that it's usually the worst case scenario when they come out with that, but I'm hoping the question now is how much of this does the market have priced in, right? Because they've seen this show before. It's not anything new. The market has to believe already that, okay, there's going to be at least 93 million acres. It's just, I feel like it's more a question how much on top of that is going to go to 94 or 95 million acres. And so that's the big question. How much is priced in?
Yeah, I just wondered if the trade will really react all that much to it or not. Sometimes you come out with an Ag Outlook Forum estimate of acreage, and that inspires farmers to go the other way, because you still have time to change a little bit.
Yeah, you find a little bit of everything. Some make those changes based on that at the last minute, and but we've seen in the past where farmers overdo it a little bit. They're chasing the profitability, and they ramp up those corn acres too much, and it kind of destroys the corn market. And we've seen that in the past. That's kind of what I'm concerned about. And it takes a while to kind of dig yourself out of that hole.
I think a bigger report will be at the end of March, right?
The prospective planning reports, I think, is going to carry a lot more influence than maybe what the USDA comes with. But it's still, the USDA report gives us a base point to kind of begin with. So because we get a picture of what they're thinking, what their methodology is.
Well, let's bring things back to the present here. Let's talk about conditions right in your wheelhouse there in South America. So what's going on with the growing conditions or harvest conditions right now?
So yeah, harvest continues to make progress. They're doing 10 to 12% harvest progress on their soybeans each week. They've had some rains come back in Argentina here. This is a longer term forecast, looking out 30 days, weather anomaly, and it does kind of show a drier trend for much of the growing belt, kind of half of that area in the Mato Grosso. Now this isn't probably going to affect the soybeans quite as much, as the harvest. I think by next week, probably around the time we're in Denver at the Commodity Classic, they're going to have half the crop out, and so the other half is not far behind. But it could affect some of the second crop corn. There's another weather map that we have that if you want to pull that up, and this is a shorter term. This is just through what is that, Sunday. and just kind of shows that we're leaning drier in the south. Still pretty decent moisture there in the center west region, and that's really the most important, where most of the second crop corn is. But that arrow is pointing to Paraná. Paraná is the second largest second crop corn producing state. Now it's a distant second, though. I want to say it's 14 to 15 million metric tons of production, but it's a critical stage where they're not quite done planting. You have a lot of corn that's germinating, so it needs some moisture, and so not a great time for it to turn dry there. But it does seem to be expanding. March, they need a lot of rainfall in March yet to make that crop go. And it's what, the previous picture I just showed you is it's starting to lean drier in March, which is unusual, and probably not going to affect the soybeans as much, but could affect the corn. And so how dry it is and how hot it is, to what degree, that could have some sort of provide support to the corn market, which it sorely needs when we're talking about a major increase in acres.
Well, I believe you have also put together some information that's actually related to ethanol production in Brazil. And let's take a look at that. I wanted to have you explain this for a little bit.
Just talking about the ending stock scenario in Brazil, we just kind of gave you a large introduction to the ending stock scenario in the U.S. This is the ending stock scenario in millions of metric tons in Brazil corn right now. And you kind of see over the years it's been trending lower. This 2.1 million metric tons is the scenario for the previous season, or the current marketing season down there. And 2.1, that's like 80 million bushels. So essentially they're out of corn. It's virtually nothing. And now they're projecting, with this oncoming crop, a modest boost to that 4.9 million metric tons. This is based off of CONAB's number. But the point is, their ending stocks are pretty low. And when they get that low, where are they going to pull from? They're not going to cut off their domestic demand. They're going to slow down their exports. And so the lower that gets, it puts more pressure on needing to produce. And any loss in productivity is going to quickly translate to a loss in their exports, which would be a good thing for U.S. farmers. And so, so what I was pointing out in the state of Paraná, that weather risk could be important depending on how long it lasts. And so that's what basically point out that the ending stock scenario in Brazil is extremely tight, and you're seeing amazing prices there right now that are almost on par with Chicago, which historically speaking is unheard of. I calculated right now that they've rallied, and so they're close to almost 470, 475 right now domestically, spot prices in places like Mato Grosso, because they don't have it. They don't have the corn, and so that storage would have paid for the whole bin this year if people stored their crop and held it 6 months. It would have paid for a brand new storage. Domestically, prices doubled in the last 6 months, pretty much. And a lot of that has to do with the next slide, as well, as that domestic consumption with ethanol is expanding. And you kind of see what the ethanol production in Brazil has done. In the blue is the ethanol made from sugarcane, and in the orange there is from corn ethanol. And you kind of go back and see 8 years ago, the corn ethanol production was pretty much non-existent, and it was all made from sugarcane. And that's slowly been changing here. Now, it's maybe not like a massive boom, but it's something that's growing steadily. They're announcing new corn ethanol plants all the time, and they're not building any more sugar mill plants. And so that ethanol made from sugarcane is kind of stagnant, and the corn ethanol is kind of eating into that market share. And so, that's basically a trend that we think will continue. And the corn ethanol will kind of displace that sugarcane ethanol, which has, been providing the ethanol market for decades within Brazil. And so I kind of, either the sugar mills are going to have to start producing more sugar, because they can't do both. They either got to produce more sugar or they got to produce ethanol. So it's kind of a different animal. Or they can start exporting it more, and which that is a good thing for them, because they're kind of set up for, they have a very low carbon footprint. and so they're set up for SAF right now, and so they can begin exporting more ethanol from those mills.
Last week you had put together a kind of a spreadsheet table on profitability, if there is any, for soybean producers in Brazil. And it seems like it's an uphill battle this year for them to really make much of any money. How about on corn? Have you done any research on that? Can they make more money on corn versus soybeans this year, or is it the other way around?
Tackled that probably the week prior, so it's been a couple weeks now, and it was kind of similar to the corn. It wasn't quite as negative, but it was kind of a break even proposition right now. The costs have gone up. Prices have helped, but their yields are half of what ours are, and so it was with the way that kind of the new crop price anyway is what they're looking at. They're planting it now, and but once they get to that harvest, the price is going to collapse again because the crop hits the supply all at once, and pushes prices lower, and so. But I would think with the spot prices the way they are now, it's probably going to encourage producers to maximize acres and kind of roll the dice again. And so but yeah, it's they average maybe 90 some bushels per acre in Mato Grosso or even in Brazil, and it kind of takes 105 bushels per acre to break even. And some people will do that, but by and all, it's not going to be a money making proposition.
I just wondered, given the way the market structure is right now, and the supply and demand tables around the world, I just wondered if that was offering any enticement for farmers to add to their corn acres next year. I know they have been gaining every year on soybean production. Can they do that in corn too, do you think, moving down the road?
Certainly can long term. Short term, they were actually projecting lower acres for this second crop just because we've been entering into this low commodity price phase. And I don't, it's one thing talking about the nearby spot prices is something else when you're talking about new crop prices. And then the spot prices are great. The new crop prices are terrible. And so and are not profitable. But yeah, it's still, you could see an increase in acres. That's something that can change quickly because they aren't planning. I think a lot of people think they're planting all of their corn acres to the soybean acres. It's really on average only like half. And so, it wouldn't be a big deal for them to increase that 5 or 10%. But yeah, so I would think that with some what's happening with the spot market, that would entice some farmers to want to maximize their acres.
Do they forward price their corn there like they do here in the U.S.?
Yes. Yeah.
They do?
Yeah, it's pretty common.
All right. So, well, let's wait and see what USDA says at their Ag Outlook Forum coming up next week. Any quick thought on wheat this year? Do you think that spring wheat acres will be up or down? Any thought?
I think one question is what's the winter kill done? What impact has that had on production? But I don't know how much the U.S. wheat market affects kind of the domestic price anymore, because there's wheat produced all over the world, and unfortunately I think our wheat industry has kind of become a residual supplier to that market. And so it's probably the more important question is what's going to happen in Russia and the Ukraine and those places that are going to get that war resolved over there. I know the administration is trying to work on that, so I think that might have an even greater impact on what wheat prices have done. But I was a little more hopeful last week. We had a little bump here in wheat prices, and then now we've collapsed again. And so we need the market's still trying to find its bottom, it looks like, and hopefully we're starting to carve that out. But it seems like we just continually make a new low, and so we not convinced we found the bottom quite yet.
Well, anyway, I look forward to seeing everybody out there in our audience in Denver at Commodity Classic next week. Again, we will have our learning session on March 4th. believe that's on Tuesday. That'll be at 10 o'clock in the morning, Mountain Time. And it's going to be in the Mile High Ballroom. If you want to make note of that, make sure you stop by and see what we have to offer there and take part in the conversation. We're going to be taking questions from the audience. We'll have Eric Snodgrass there. He'll be giving his weather outlook. And we have Karen Braun of Reuters, Thomson Reuters. She'll be there discussing current events. And of course, Matthew Kruse will be there on the panel. And he'll talk about South American production and the new USDA numbers as well. We'll look at our acreage outlook for this year. Should be a good time, so we hope to see you there. That'll do it for this particular episode. I appreciate you joining us. For our producer, Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time on the Comstock Channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.